Today I'm going to show you how to read your profit and loss statements and what insights you can get from it. So what you do is you probably start in your books here on the dashboard, and then you go to reports, financial statements, profit and loss. Now this set of books that I'm using is Bugs Bunny Incorporated, which is totally fictional, and due to the fact that it's not a complete set of books, some of the information is not there, but due to confidentiality I can't use another set of books. So what you do is you will your best option is to basically look at more than 1 month at the same time, because then you can see trends, you can see how this figure looks in comparison to another figure. One of the ways that I like to use is to look at the yearly figure, and then I've got to go to 2021 on this set of books, and then I can choose, I want to look at the month and see then how that looks. So I'm just waiting for this report to load. So here you will see all the different months, and usually it's too big to fit onto a screen, so you can then make it smaller. I just use Control and scroll down with my mouse button, and then it makes it smaller. So what you want to see here is how does this month's figures look compared to the previous months? Is it more? Is it less? Should it be more? Should it be less? Because you have a gut feel of what is going on in your business. And if these figures doesn't correspond to your gut feel, it can be either time differences that causes the difference. So in other words, you felt that the sale went through in July, but maybe the invoice was only issued in August. That would be a time difference. So you can, at any point in time, you can actually click on either the total at the end, or you can click on a specific month's figure, and then it will actually show you how that total is made up for that specific amount. This is very helpful. Let's say you look at your insurance and you see that your insurance should, the argument's sake, be 2,000 Rand, and then suddenly on this specific month it is 4,000 or 5,000 Rand, and if you click on that amount you can see which amounts are included in that figure. You can also see then if there's a misallocation, maybe something that's in that account that shouldn't be, or you will find, oh yes, it was that access that I paid on when we repaired the vehicle, or whatever the case may be. So that's the one thing that you do. If you have cost of sales, for instance a retail business, then you can also work out your GP percentage, your gross profit percentage. How you do that is you take this gross profit amount and you divide it by the total sales. Now in this case it doesn't really make a lot of sense because it's made up figures, but you will typically look for a gross profit percentage that stays fairly consistent through the periods. It will never be exactly right, because there are just too many variables and too many factors that comes into play. But you want to find that range between 25 and 30%, between 60 and 70%. That percentage will be unique for your industry as well as for your business in that industry. Then you look at other income items. Those are other sources of income apart from your sales that you had. That's kind of that unexpected surprises often. Again, if it's something that happens regularly, you want to make sure that there's an amount for each month that you've received. So let's say you received rental income for an office that you sublet to another business. You want to make sure that there's an amount for each of those months. Then with your expenses, again you look for the pattern. Now here I'm going to use the subscriptions and licenses because that's the one that we have most info on. So here you will see that we had different amounts for each month, but you can see there's a steady trend. There's an increase every single month, which is typically in a small business probably rather at the start of a business where you continuously have expenses that increase. But then the business gets to a place where you have the subscriptions that you need, you have the licenses that you need, and there will be a lot less variance, and you will expect the trend to stay the same. So you have to always interpret these figures with your specific business, with your specific industry in mind. If you see these figures and you get to a place where you're like, okay, this doesn't make a lot of sense to me, send me a voice note, send me an email, send me a WhatsApp, and I will go and have a look, and then we can discuss it. We can even have a telephone conversation that I can book with you and say, okay, this is what I see, and I can teach you that every month that you do this, that you get better and better at interpreting this. The last thing that you want to look at, there's obviously a lot of other things that you can look at, but for starters, this is the most basic things that you want to look at. You look at your net profit. Now, our poor Bugs Bunny is not making any money, but you can see it is getting better and better every month, so at least there's that trend. But you want to look at your net profit percentage as well. Again, you take the total net profit as a percentage of the sales. And then you can compare that to your gross profit. Again, you preferably want this to stay fairly consistent, but this can go up, because as your gross profit increases and your turnover increases, your expenses here will not necessarily increase at the same rate that your sales are increasing, which means that your net profit will actually increase, and that will give you a higher net profit. So that's basically the basics of checking your profit and loss statement. If you've got any questions, let me know. I love answering those questions. Enjoy.